We're going to look at some of the news from the last week, including Tesla's inclusion in the S&P 500. Target and Walmart reported their earnings. We're going to look at Best Buy a little more closely as they're reporting this week. We're going to check out the PLTR charts to follow up on my trade from earlier this week. Finally, look at some of my Robinhood Options trades. Hey everybody, welcome to Walrus Street. Walrus here. Before we get started, as always, I am not a financial professional. All information in this video is for entertainment purposes only. Last week was the week of November 16th, and we had kind of a smooth week compared to the COVID vaccine announcement from Pfizer the week earlier. We had Moderna releasing information on Monday about a new vaccine, and that kind of gave markets a little bit of a boost, but with the kind of first mover phenomenon from Pfizer the week before, there wasn't as big of a move, as big of a reaction from Moderna. So let's take a look at some of the news stories from last week. Now, before we get started, in case you guys didn't know, every week I do release a spreadsheet, including my stock analysis, my technical analysis, my predictions on the prices, some of the options plays that I'm thinking of doing. Now, this is my spreadsheet for this week. I just finished compiling this one. Taking a look at a couple different stocks every week. We've got Rocket, Bank of America, AT&T, Work, American Airlines, GE, Nokia, Ford, Palantir, and Best Buy. I go back, I do this every single week. I'll put the link below the video, and if you are interested, check it out. It is a PDF I release totally free every single week. Let's get into some of the news. Big news here, obviously. Moderna vaccine would be coming out for COVID. One big difference between this and the Pfizer vaccine, Moderna expects the vaccine to be stable at normal fridge temperatures of 2 to 8 degrees. For 30 days, it could be stored up to 6 months at -20. If you remember, one of the logistics problems we talked about last week with Pfizer's vaccine was that Pfizer's vaccine has to be shipped and stored at -70, typical temperature of an Antarctic winter. The Moderna vaccine, it had slightly higher projected effectiveness. It's more easy to transport compared to the Pfizer vaccine. Either way, competition is good. Another big news story for the week was Amazon jumps into the pharmacy business with online prescription fulfillment, free delivery for Prime members. As you can imagine, this had an impact on the other pharmacy stocks, much the way that Amazon has an impact on retail stocks. If we scroll down, there's a pretty cool little excerpt here saying pharmacy stocks tumbled following the launch of Amazon Pharmacy. CVS dropped 8.6%, Walgreens 9.6%, Rite Aid 16.2%, Good Prescription, which helps consumers find discounts, fell 22.5%. Amazon shares closed slightly higher. A little positive for Amazon. Obviously, diversification for that company is good. They may have already tapped out the retail market for retail goods, so they do have to expand. I mean, this is cool for Amazon. If you're an Amazon shareholder, good for you. Tesla stock jumps on carmakers' addition to the S&P 500. The stock just shot up this week. If you weren't paying attention to Tesla, it's going to be joining the S&P 500 prior to trading on Monday, December 21st. This is big. As soon as it's included in the S&P 500, Tesla is going to be one of the 10 most valuable companies in the index. This is obviously going to push up the Tesla shares a little bit. They're already insanely overvalued probably, but people are still willing to pay the price. So that begs the question, are they really overvalued? I guess not. But the other cool thing about this is once a company is included in the S&P 500, it's going to have to get included in a lot more ETFs. Your SPY ETF, I think it's already in QQQ, the VOO ETF, these S&P reflective ETFs are going to have to start including Tesla. And because it's going to be one of the 10 largest, if it's an ETF that's like market cap weighted, then Tesla is going to be displacing a lot of other companies in the ETF. With Tesla's volatility and price, I'm curious how firms are going to be handling that. We've got Target coming out. Their earnings this week, it was an earnings beat. They crammed a year's worth of growth into a quarter. This is crazy. I've not seen much with this. The retailer's sales totaled $22.3 billion in the 3 months ending October 31st, a $3.9 billion increase from the same period last year. By comparison, the chain's increase in sales for the entire preceding fiscal year was $2.7 billion. In other words, in the third quarter alone, it had to figure out how to manage the equivalent of more than a year's worth of growth. Just quarter on quarter, they added more than a year's worth of growth from the previous year at that time. This is great news for Target, great news for retail. Roblox The kids gaming company that's been around forever, 10 years. When did it premiere? Like 2010, something like that. Roblox IPO filing. It's happening, I think in December it's going to be IPOing. I don't think about Roblox because I'm not really in the age group that cares about it. But I do know that a lot of my friends that have kids, they still play this game. If you're not familiar with Roblox, it's basically like a creative platformer and social networking for kids. They can use the in-game currency, Robux, to spend on the different games on the platform. It's definitely a creative outlet, and with a lot of kids doing school at home, spending more time at home on their computers, their revenue is growing, and their daily active user base soared 82% to 31.1 million in the 9 months ending September 30th from the same period the year ago. Their user base is still growing 10 years into the game. They are showing profit on their Robux sales, their in-game currency. I'm probably not going to get in. This is going to be one of those IPOs that I'm calling it right now. It's going to shoot up right after launch and then come back down to reality, and then I might consider it. So Walmart earnings topped expectations, just like Target, but this one was kind of interesting. Walmart's e-commerce sales soared 79%. The retailer had a strong quarter despite an unusual and softer back-to-school season and less benefit from government stimulus spending versus the first half of the year. Walmart still had a strong quarter despite not having normal back-to-school, which, if you follow Walmart, you know usually their back-to-school shopping spending is incredibly high, and that kind of carries them forward into the fourth quarter before the holidays. Even though that wasn't very high, this is pretty cool. I don't want to talk much about crypto, but you do have to talk about Bitcoin this week for one reason only. Not so much the price. The price did go over 18,000 again, but right down here, it has a market value of around $334 billion. Why that's important is if you remember back in 2017, the crypto craze, everything was going up, Bitcoin hit 20,000. At that time, its market value is only 322.7 billion. It's actually 12 billion up from that. And we're at 18,000. So if it does keep going up, that's something worth watching. You've got a lot of news this week for retail coming out. We had Walmart and Target reporting earnings beats, and we had Amazon going up a little bit on the pharmacy inclusion. So even though we are in a little bit of a market kind of downturn with COVID, it's not really affecting people's purchasing patterns as much. These big stores that have multiple sources of revenue, like Walmart has groceries, Walmart has pharmacy also, Walmart has the retail goods, Target has groceries, Target has retail goods, Target has pharmacy. These companies that have been able to diversify their revenue streams are still thriving despite COVID. People still need to buy stuff. Now that we have the news covered and out of the way, I do want to take a look at the upcoming earnings reports for this week. This is a holiday week, Thanksgiving. There's really no companies reporting Thursday and Friday. Now let's take a look at the earnings though. Retail, mostly consumer electronics. On Tuesday, we've got Best Buy, HP, and Dell. Those are all consumer electronics. Some retail with Dollar Tree, Dick's, Nordstrom, AEO, Abercrombie, Burlington. Wednesday, Viomi, I'm kind of interested in, but I don't really like Chinese companies very much. I mentioned this before with the accounting. There's really not that much that I'm interested in here. I do want to talk about Best Buy a little more closely this week. The reason that I want to talk about Best Buy, during the pandemic, we've seen electronics rise a lot in price. If you think about the pandemic stay-at-home stuff, your Peloton, Slack, or Zoom, they've all gone up to these really, really high valuations. People are spending more money on their home electronics. Logitech has increased. Corsair IPO'd, a couple months ago, and it's already up something like 100, 200%. I don't know. It's something absurd. I didn't even look at it. I actually think that Best Buy is going to beat its earnings. Let's take a look at the research that I did do on Best Buy this week. Right now, we can see the volume sucks. 1.7 million in volume, average is 2.4. There's really not much interest in this stock at all. This is what I found to be really interesting though. Best Buy has beaten its earnings expectations 4 quarters in a row that are listed here. And the last one was actually huge. The Q3 2020 was a 63-cent beat, and that was well into the pandemic. There was this story on launching Instacart for same-day delivery. So Best Buy is taking the Walmart and Target kind of curbside delivery approach to make sure that their customers can still access their products. That's pretty cool, but not really groundbreaking. If we look at the chart for Best Buy, this is interesting. Now, this is the 5-year chart going all the way back to 2016, where it was like $30 a share. It has been a steady riser over time. This little jump down here, now this was in 2018. If you remember, like heading into winter, that last quarter, the stock market absolutely tanked, especially more so in December. And you could see the December just drops right here. But Best Buy did actually recover, and you could see it recovered the price conveniently right before coronavirus. And then it suffered another hit and dropped down in the coronavirus. But we've been climbing really, really sharply back up. Right before the coronavirus got really, really bad in March, Best Buy was trading about $90 a share, dropped all the way down to, what is this, 50? It's a substantial drop. It actually hit an all-time high a couple days ago at 123. It was even higher than that midday sharing. And right now we're sitting at about $1.19, 119 a share. If you look at some of the technicals on Best Buy, specifically something I thought was really cool that I noticed was the 50-day moving average. Best Buy's following the 50-day moving average almost like it's a little bit of a support. It's kind of a loose support, but you could see these low candles that are dropping down. They're not really crossing and staying under the 50-day. We had some crosses this week, and last week and the week before, but it's not staying under, it's riding above. And you can also see the 50-day moving average is kind of flattening, and you can see that same motion with the price itself. We hit that all-time high, immediately bounced back down. Now we're kind of hitting these slowing candles that are kind of staying in the middle of their day trading range going into earnings. So I think Best Buy is entering a bit of a new channel here between about 110 and 125. That's a wide channel, but it looks like it is going to be entering a channel territory as the 50-day moving average kind of flattens out. Best Buy's PE ratio is 19, and it's hard to compare Best Buy's PE ratio with other companies. Now, the reason for that is Best Buy is a consumer electronics company. They sell specifically consumer electronics. They offer consumer electronic repairs. That's what they offer. So if you think about the market, there's not any other stores nationwide that do something like that. We had Circuit City, but that obviously doesn't happen. The only things I could think of to compare Best Buy to see if it's really fairly valued is Walmart and Target. And that's not the best comparison because, as I mentioned at the beginning of the video, Walmart and Target sell more than just one thing. They sell clothes, food, pharmaceuticals, and electronics. That being said, I couldn't come up with anything else to compare it to. So I did look up the PE, and Walmart's PE as it stands right now is about 24. Target's is just a hair under 25. And those are kind of above Best Buy. Amazon's, by the way, if you care, is 90, but that's a totally different type of company. So I'm not really sure how to react to this PE. In my mind, I feel like it's slightly overvalued since Best Buy is kind of just a one-trick pony. But at the same time, we've had these consumer electronics being incredibly successful during the pandemic. So maybe it's just a kind of symptom of the era that we're in, that this is actually a fair valuation. Now, by the way, I'm using Simply Wall Street, cool website. They're indicating that this is not really a value or growth stock, but it is a steady dividend health stock. So the price isn't going to move much. And if you think about the channel locking that I was pointing out in the TA, that makes sense. Let's come down here. We could see, it did just cross the all-time high. We already looked at that. Here's the price to earnings. Simply Wall Street, they just use pure math formulation, and they are calculating Best Buy to be a little bit overvalued. That's it. And if you are interested, their future growth is forecasted about 7.6%, and their earnings per share is also increasing, projected to keep on going up. So this is kind of a slow growth company as it stands. This is an interesting chart here, their debt to equity. So you can see right now that Best Buy's debt actually did rise, but it never went as high as their equity. So they are able to manage their debt. Balance sheet, the debt is a very, very small portion of their equity, accounts payable, cash, short-term investments. I mean, this is a very financially sound company. The dividend yield, if you are a dividend investor, is currently sitting at about 1.85%, which isn't high, but it is quite stable. So what does that mean? What do I think about Best Buy? I think that Best Buy is going to be one of those stocks that you can actually play options on if you're willing to commit about $12,000 into it. It really does look like it's going to be settling into a little bit of a channel there. And I think it's going to stay there until we start getting into the post-holiday earnings reports and we see how big of an impact the new Xbox console and the new PlayStation console have on the sales for Best Buy. I'm not personally going to be investing in Best Buy, but I am actually very interested in following this stock over time to see how it handles the new market. I am a firm believer that brick and mortar stores are outdated. I think their business model is failing. But one important thing about Best Buy, technology always has a learning curve, and people are more comfortable touching something, tactily feeling it, and getting somebody to help explain the ins and outs to them. And Amazon does not offer that. Best Buy does. Many electronics are high purchase items. They're high value items, and people are more hesitant to buy them blindly online, especially people of older generations. America has an aging population, as with most other developed nations in the world. So I think Best Buy is actually here to stay. It's not going the way of Circuit City. I think that Best Buy is a very financially sound company, as we saw on the financial report there on Simply Wall Street. And they're going to be around for a long time, competing with Amazon, competing with Walmart, competing with Target, trying to give people an opportunity to pick up the electronics, to touch them in person, to see them, to try them out, to easily compare them. Holding Best Buy for its dividend, while not a great idea, it's not a terrible idea either. So if you do see this as a company that can expand and grow in the future in the face of its competition, that dividend is going to be a nice little boost to you while you're waiting for that growth to happen. I want to take a look at Palantir, how it's been doing since I made my purchase this week. You could see the Palantir volume is still really high. We're at about 72 million in volume, average is 51. So we're still up 140% for that. If we look at the chart for Palantir, this is similar to the chart that I showed you last week. We could see that big jump up on Tuesday. It ended up going as high as 1966 on, let's see, on Friday before coming all the way back down to about 1815. It's up after market, another 10 cents as of the recording of this video. So this is something that I'm still really bullish on. I think there are going to be a few red candle days, as there should be. Nothing grows straight up. I'm not really too afraid of this. I actually like the way it's positioned going into next week, and I'm hoping that we can have another green week. Let's take a look at my options trades for this week. There's only going to be a couple of them. The first one is Rocket. I got assigned my shares on Rocket last Friday. My average cost is $21.14. So what I want to do, now that I've been assigned, I'm going to move out 1 week, and I'm going to sell some calls above my assignment price. So this will be one contract for 100 shares, $34 credit, swipe up, and check everything. We're good to go. The next trade is going to be Palantir. My cost basis for Palantir, it's actually on M1, and it's $16.74. So what I want to do, since I'm bullish on Palantir, I'm going to go ahead and sell puts below that. Now this delta is a little lower than I like. It's only about 16%. But what I want to do is lower my cost basis if Palantir drops. So I'm going to sell one contract, collect the $23 in premium. That's fine. The last trade I want to make is with American Airlines. American Airlines is still channel locked, as it always is, between 11 and 14. So I'm going to go ahead and play that. I think it's going to bounce up this week with people traveling for the holiday. So what I'm going to do is actually go for a put credit spread. I am going to sell a put at 12, and I'm going to buy a put at 11. This is a put credit spread. One contract. collect the $14 in premium. It's only $100 collateral. And we're good to go. There you have it. Those are my trades for this week. I hope you guys all enjoy your holidays with your family. Don't get too hung up on the stock market this week. There's not much happening during the holiday. No earnings really Thursday and Friday. Enjoy your time with your loved ones, and I'll see you guys again next week. Please like and subscribe if you're enjoying this content.